I'm Catherine McGrady, the CEO of CNA, and this is CNA Talks. In this podcast, our experts discuss current events, policies, and research that impact our nation's security.
This is CNA Talks, episode 109. I'm John Stimpson with CNA's Office of Communications. In this episode, China's foreign direct investment in Arctic states and how these countries can protect their national security interests. Well, I am lucky enough to have two great CNA analysts joining me to talk about Arctic foreign direct investment. First, Cornell Overfield. Cornell is an associate research analyst in CNA's Strategy, Policy, and Analysis program. Thanks for joining me today, Cornell.
Thanks for inviting me on, John.
And we also are lucky enough to have Rebecca Wolfson, a regulatory analyst in CNA's Office of General Counsel. Thanks for joining us, Rebecca. And I think this is your first time on the podcast with us.
Yes, it is. Thank you so much for having me.
So we're here today to talk about the report that the two of you worked on, or more accurately, the project that the two of you worked on, which extensively covers foreign direct investment in the Arctic. And just for a note for the listeners, throughout this conversation, we'll be using foreign direct investment and FDI interchangeably. And the project specifically covers PRC, or People's Republic of China, foreign direct investment. So Cornell, I wanted to start with you. Can you tell me just a little bit about what was the impetus for this project? How did it get started?
Sure. So the impetus for this project was actually a provision in the FY20 National Defense Authorization Act that called for an independent analysis of China's investments in the Arctic region. The legislation was pretty in-depth, and so it spelled out in pretty good detail what exactly we needed to do, which is always useful when we're trying to figure out the scope and our approach. So it basically tasked us with quantifying China's investments in the Arctic, as well as assessing the legal and regulatory tools that Arctic states possess to screen that incoming investment. We also had to explain the strategic implications of China's Arctic investment strategy using primarily Mandarin primary and secondary authoritative sources. That was done by our China research team. And then finally, of course, we had to provide recommendations, and that drew on all of those lines of effort that I just mentioned to come up with a portfolio of options that U.S. policymakers could consider and hopefully implement as they thought about how to respond to Chinese foreign direct investment and broader economic strategy in the Arctic region.
And, you touched on something in the course of that conversation that I think is really important, is that this project was an interdivisional effort throughout CNA, and a lot of different teams were involved and a lot of different expertise were brought into it. And it just, I think, is a great example of, the vast talent pool that CNA has available to it and how we can respond to sponsors' needs in a very effective way because of that.
Absolutely. Could not have done this without the cross-divisional effort here, everything from the Office of General Counsel to, of course, strategy and policy analysis to the Chinese analysis team. So this is really an incredible effort and really good example of what CNA can do when we synthesize and pull together all of the terrific expertise, language, analytical, programming expertise that exists here at CNA.
Absolutely. I wanted to touch on something. What is the value for the sponsor of making this report available to the public? Because a lot of what CNA does is classified. And in this case, though, this is widely available and anyone can read it. Did the sponsor have a particular interest in this being open to the public?
We pushed pretty hard for it to be available to the public. And the logic, I think, for the sponsor was that this is a project that was, of course, completely unclassified, done with CNA's own data, right? CNA collected the data that went into this. It wasn't like we were using our sponsor's data. So that, I think, definitely helped. And CNA's done work on this in the past that's been publicly available. We had a report back in 2017 that our general counsel, Mark Rosen, led and put out that was one of the first deep dives into the possible problems posed by PRC FDI in the Arctic. So this really was part of a continuation of CNA's work on this project. And I think the sponsor sees the value in this being public so that it informs the debate, right? Because this really was about informing Congress, but also informing the public. That was the genesis and impetus for this provision in the NDA, and why the sponsor, I think, ultimately decided that this was good to go for public release, which is terrific because we like to be able to share our work publicly and not just educate the sponsor, but educate and inform policymakers and the general public.
This investment in the Arctic isn't just about governments, right? Like private corporations are getting involved. There are nonprofit organizations that are invested in that. There are a lot of different stakeholders who engage in this region. And so making this information available, I definitely see the value of that.
This might be getting a little ahead of the conversation because it teases some of the findings we had. And to be fair, the sponsor did approve or agree to making this report publicly, or these reports publicly available before we got to those final finding stages. But our findings were more nuanced, I think, than a lot of the debate that was out there on PRC investment in the Arctic. And so making it public, I think, was even more important in that context, because it wasn't simply reinforcing the common narrative, but saying, hey, let's think about this a little bit more critically, because there's more information. We have a more nuanced data analysis and data collection process in this report than we did in our 2017 report. And it's shedding more light and helping policymakers and analysts and commentators better understand the scope of the problem so that they can calibrate their responses and their recommendations and their commentary accordingly. Just one more reason I think why, where possible, is great to make our findings public, because they can really help shift the conversation publicly.
Mm-hmm. And it's great that the sponsor was in agreement on that. And this was able to move forward. Rebecca, do you have anything to add generally on anything we've talked about so far?
Yeah, I think the unique thing about the study is it really focuses on China in the Arctic. It doesn't focus on other countries, but takes like a very narrow focus on what China's doing. And China's obviously becoming a much bigger actor in the region. So I think that that's really important.
And setting up your report a little bit, Cornell, can you tell me, what are the legal conditions that are already in place that govern foreign direct investment in the Arctic?
Sure. That's one of the 4 reports that we put out, and those are all available on CNA's website. I'm sure the podcast will include links to them. This report was driven by the NDA's tasking to examine what, if any, Arctic-specific screening mechanisms and sort of general screening mechanisms exist to help countries protect themselves against potentially predatory investments or investments that might raise national security risks, right? So foreign direct investments can be screened. I think the most famous example of this is the US's screening mechanism in CFIUS. That's the Committee on Foreign Investment in the United States, which is this fairly powerful interagency mechanism that has the ability to scrutinize incoming investment, so proposed direct investment, right? When foreign companies want to take positions or majority positions, take sort of legal control of a US business. And CFIUS can basically scrutinize this and say, well, does this raise national security concerns? And if so, can we mitigate them using some legal constraints or conditions on the investing company's behavior or use of this new asset of theirs? Or maybe we just need to block it altogether, right? And so occasionally those blocks happen, and when they do, it's usually big news. But I think the mitigations go under the radar, but are quite a bit more common. So CFIUS is really the gold standard, I would say, when it comes to international foreign direct investment screening. But what we found when we looked at all the other Arctic countries beyond the United States is that while there aren't any Arctic-specific screening mechanisms, pretty much all the countries that we looked at do have some kind of screening mechanism that covers the entire country, including the Arctic. So some of the countries have better mechanisms than others. Canada also has a fairly robust 2-track screening mechanism, which has been made more robust in recent years. Russia also has some fairly effective laws on the books. Norway and Iceland also have screening mechanisms that are okay, right? There's room for improvement, but generally, they have those mechanisms on the books, at least. The implementation might not be 100% yet, but that's something that the US could help with, right? And then Greenland really is the last gap. That is the one jurisdiction where you don't really have a good FDI screening mechanism itself. But what we also found was that if you go beyond just pure FDI screening regulations and look at some of the sectoral or industrial policy regulations, Greenlandic authorities do have some tools to try and limit or control what kinds of investments, what kinds of activities are approved in Greenland. So those range from, the regulations on mining, because a lot of the interest in Greenland has to do with mining rare earth minerals and uranium that's bountiful in Greenland. Land use regulations are also a huge tool for Greenlandic authorities to scrutinize and perhaps block foreign investment, just because land is common. Basically, you can lease land, but you can't actually own land in Greenland. So that's a really important tool that they have. The bottom line here really was, by and large, the rules on the books are solid in most places, Greenland notwithstanding. The real challenge is making sure that those rules are applied well and that policymakers and regulators are well informed as they apply those rules and scrutinize investments. And from there, that's where the US can really step in and help partners in the Arctic to understand who's investing in the Arctic, what risks that may entail. And from there, what's in the best interest of Norway or Iceland or Greenland or Canada when it comes to that specific investment.
So if I could just summarize, it sounds like most of the Arctic states have laws on the books that allow them to screen foreign direct investments that might pose a national security risk, with the exception of Greenland. But it doesn't sound like, from what you've said, that there's any kind of, international law governing this district. It all seems to be handled by individual states.
It's all national level, 100%. Yep, that's exactly right.
I did want to ask, though, Cornell, I believe that Greenland is territory of Denmark. And how does that relationship function in this case? Does Greenland have some autonomy in how it makes its laws here? Is it up to Denmark? How does that work?
Great question, John. Greenland has a pretty strong pro-independence movement, which has culminated in it, at least as of now, having significant autonomy from Copenhagen, the capital of Denmark, right? So it is part of the Kingdom of Denmark, but Denmark itself is part of the European Union. Greenland, however, is not part of the European Union, so it has a lot of carve-outs. Denmark recently introduced a FDI screening regulation. This is part of a EU-wide initiative to bolster their screening mechanisms to better control who is investing in the European Union as a whole, right? Because it's a common market. So if one country has low standards, that could have implications for the rest of the members of the union. So they've really tried to improve that, and that's great. But Denmark's new regulation on FDI screening does not apply to Greenland. So that's a really important distinction, where the political independence or the political autonomy driven by the independence movement in Greenland has a really important implication for FDI screening, because those economic regulations in Denmark do not apply in Greenland yet. And it's unlikely that they will, because of that pro-independence movement in Greenland at the moment.
That is very interesting. It makes you think it's, the natural thing is to say, like, well, of course, if Greenland wants to be independent, that is probably a good thing. But the levels of complication that come up in geopolitics in these situations is always kind of an interesting dynamic to this, especially when you're talking about the Arctic and it's a vulnerable region in terms of issues of climate change and species that live up there and things like that. So just interesting how layered these issues can be.
Absolutely.
All right, Rebecca, let me turn to you for this next question. Cornell did a great job of laying out the legal conditions that govern FDI in the Arctic. So now that we know all of that, let's get into it. What is the nature and scope of PRC, foreign direct investment, in the Arctic region?
Sure. So one of the reports that we did focused specifically on the nature and scope of China's FDI in the Arctic. And this really spoke to the section of the NDAI that asked us to look at Chinese-funded projects in Arctic countries. So for this particular report, we explored both Chinese foreign direct investment in the Arctic and then also China's broader investment activity in the region. FDI is important to look at because it provides control over firm activity and assets, and it can give China a more lasting presence in the region as opposed to some of China's broader economic activities such as contract work. So what we found in terms of Chinese foreign direct investment in every country besides the Russian Arctic, there really wasn't much foreign direct investment taking place. It didn't seem like Chinese foreign direct investment was on the rise. In fact, there were maybe 4 or 6 investments maximum, and in a lot of countries, there's actually 0 foreign direct investments that had taken place.
That's interesting. It kind of runs contrary to what you hear about China on a global scale, where China is building ports in Africa and buying up, control of them in the Middle East and Central America, and expanding the role of their navy and building islands in the South China Sea, and has also stated their intention to grow their presence in the Arctic, using language like referring to themselves as a near Arctic state. what is keeping them from?
John, I'm happy to take a first stab at answering that terrific question. I think that leads into some of the work that our China team had a chance to do. And I highly recommend that report because it really gives you an excellent overview of what China's aims are in the Arctic, but also a nuanced understanding of why they haven't achieved those aims in certain cases, right? And so I would say there are perhaps 3 or 4 big reasons why the vision of China as a near Arctic state that has ambitious goals to be present in the Arctic have not resulted in higher investment activity, as Rebecca just noted. The first is that, as I mentioned, right, Arctic countries have screening mechanisms, which can help filter out and have, in some very high profile cases, actively prevented PRC investors from taking over projects, right? And so I think the most high profile case in recent years was the Hope Bay gold mine up in Canada, which a Chinese company was looking to take over. The Canadian government, after considering the proposal, said, no, this is a national security risk and we're not going to allow this Chinese company to take over this company. And that was that. So that's a major block. A second and sort of ancillary or related element here is China's history of economic coercion as a tool of economic statecraft, right? So investment and providing money is all well and good, but on the flip side, China does have a reputation of using those economic ties as a bit of a stick, and in the Arctic, right? And so Norway is a terrific example of this, where after a Nobel Peace Prize was awarded to a Chinese dissident in 2010, China basically retaliated by cutting off economic ties with Norway, right? And so Norway got a clear taste of, the downside of the risk of deep integration and deep reliance on Chinese economic activity and Chinese money with that whole experience. And I think that really was a signal to the rest of the countries in the Arctic, which share pretty good relations and are pretty tight knit. Hey, this is a potential outcome of a really close relationship with China. And then finally, and I think this was perhaps for me as someone who's, again, not a China expert, the most interesting finding. And that was that China team found some instances where Chinese firms were concerned about profitability. And that posed a bit of a problem for the Chinese Communist Party and their planners, because at the end of the day, some of these Chinese companies are still very much interested in their profits, right? They care a lot about their profits. Maybe that doesn't hold true as much for the state-owned enterprises, but for the private enterprises, certainly profits matter, right? And the Arctic is a difficult environment to work in. And basically all of the Arctic states have pretty robust environmental protections. And on top of that, it's an expensive place to work, right? It is cold, it is dark for most of the year, and you're far from markets. And so there's a lot of costs associated with operating in the Arctic, with investing in the Arctic. And a lot of companies, including some Chinese companies, look at that and say, no, we're not going to invest here because it's not profitable. And so that's also been a challenge. There certainly are ways around it, and China perhaps is better placed than other countries to get around those issues of firms being concerned about profitability because of their state-owned enterprise system. But it is still something that does matter in China's case, and has been an impediment in some cases to realizing investments in the Arctic.
Well, and even state-owned enterprises aren't immune from just the sheer resource cost it takes to operate in this region. You need more advanced ships than you would need in any other region, like icebreakers and things like that. The insurance costs are I'm sure higher because of the inherent risks of doing things like this. There's profitability, but there's also just practical cost is, I guess, what I'm getting at. Rebecca, anything to add? Anything we've been talking about here?
Yeah, this isn't directly related, but going back to Chinese foreign direct investment, I think it's important to also look at China's broader economic activity, because this can still pose concerns for Arctic states and their security environments. So Chinese companies play a large role in critical infrastructure, such as telecommunications in some of the Arctic countries. And a good example of this is Chinese-based firms supply 5G equipment to 2 of 3 Icelandic communication companies. So although this isn't foreign direct investment per se, they're just supplying supplies to these telecommunication companies, it does give them a good degree of control over critical infrastructure in these countries. So this is significant because some of the smaller Arctic countries, such as Greenland and Iceland, are more vulnerable.
Got it. Well, why don't we take a quick break, and when we come back, we'll talk a little bit about the recommendations your report makes.
Hi, listeners. I'm Nalanthi Samaranayaka, the director of CNA's Strategy and Policy Analysis Program. We study issues ranging from maritime strategy to managing alliances and nuclear policy. We've expanded our work in the past few years to include Arctic strategy and policy analysis and the study of non-traditional security issues, such as women, peace and security, climate change and strategic partnerships, and ocean security. If you're interested in learning more about our work, please check out our webpage, cna.org/strategy.
And we're back. All right, so Rebecca, what recommendations does your report make for the United States to protect its interests in the Arctic region?
Sure. So since China's foreign direct investment in the Arctic is relatively low, there's an opening for the U.S. to increase its presence in the Arctic. So whether this is by increasing foreign aid to more vulnerable Arctic communities or creating capacity building activities that can be used to screen and block possible dangerous foreign direct investment. So this is something that Cornell touched on. A lot of the countries do have good screening processes in place, but there is room for improvement.
Yeah, and just to build on what Rebecca said there, I think that first point that she made is really crucial, right? China's relatively low level of investment that we found at the moment, non-investment activity notwithstanding, right, is that it's an opportunity for them to get out ahead of the problem by being proactive about the potential for Chinese investment. And so we really structured our recommendations, which Rebecca has touched on already, into three different categories, right? We talked about unilateral recommendations that the US government could do independent of other countries in the Arctic. So those were to increase DoD spending in the Arctic where possible. The Department of Defense has several bases and presence in the Arctic, whether in Alaska or Greenland even. And so those could be ways to increase the United States' financial contributions or role in the Arctic as a way to provide money and as an alternative to Chinese investment. Likewise, we may think of USAID, US foreign aid, generally going to countries that are not, for example, Canada or Greenland, but certain communities there may benefit from aid programs. And so that's something that USAID could explore, although of course that would have to be done in coordination with Canada or Greenland. And then moving over to the multilateral recommendations, these are more of the collaborative legal issues, right, where the US recently put on the books a couple laws that are quite interesting, in my opinion. One deals with beneficial ownership, so trying to figure out who really benefits from a company, cutting through those shell company issues. That information can be shared with foreign partners. That could be a really powerful tool to share with partners who don't necessarily have those laws on the books, or if they do, may not have the ability to really collect as much information as the United States. Additionally, the US has this designation called an accepted investor state, which basically exempts you from some of the CFIUS regulations. Currently, only the United Kingdom and Canada, I believe, enjoy this status, but it's something that I've heard the Icelandic and Norwegian authorities are interested in. And so the US could try and lead the Icelandic and Norwegian governments to update and enhance their regulations, both on the books and in practice, as a pathway to achieving that status and making it easier for Icelandic and Norwegian investors to invest in the United States in certain sectors. And then finally, we had some really ambitious institutional recommendations. I think the most prominent one, and this is something that Mark Rosen brought up in his report back in 2017, is an Arctic Development Bank. This is a really, or could be a very powerful tool to displace PRC investment, whether from Chinese development banks or from Chinese companies, by providing an alternative source of capital for Arctic communities. Because at the end of the day, right, Arctic communities need capital to invest, whether it's in natural resource extraction or tourism, right? They need money. It's a problem that's basically everybody who studies the Arctic knows about, that there's this huge investment gap in the Arctic. And so at the end of the day, these communities want to prosper. They have a right to prosper. They have a right to grow. And if we want to support that goal without creating national security risks, the best way to do that is to provide alternative sources of capital for local investment. And a development bank could be a great way of doing that.
Yeah, as you said, these are very ambitious ideas, but the important part of all this is that we're starting to have these conversations now so that we move forward on them and, they start, and maybe in the future they start to come into place. But it does seem like there's also pretty immediate steps that Arctic states could take to protect their own national security interests in the region, and that there are some pretty good frameworks in the United States and Canada to work with. But with that, unfortunately, we are out of time. I want to thank you both again for coming on.
Yeah, again, thank you, John. It's great to be back on the show, and looking forward to being on again sometime in the near future.
Yeah, thanks, John, for having us.
And for our listeners, we'll have links to all of the reports in this project in our show notes. So if you'd like to learn more about anything we talked about today, there's a wealth of information there. And we'll see you all next time on CNA Talks. Thanks for listening to CNA Talks. The views expressed are those of the commentators and do not necessarily reflect those of CNA or any of its sponsors. CNA Talks is produced, edited, and mixed by John Stimpson. Our theme music is by Edward Grenga. If you enjoy our show, we'd love if you could give us a 5-star review on Apple Podcasts and tell your friends about us. Thanks again for listening, and we'll see you in 2 weeks.